I have prepared another 10 slides, right, that has a breakdown of other critical elements, more detail to describe what is in the summary earlier, right? So if you're interested, click on the link below to download. Hi, I'm Kathlyn, and I'm the Chief Trainer of Beyond Insights. In this video, I'll be sharing with you Tesla pre-earnings insights. How many of you are looking forward to Tesla earnings? Unfortunately, Tesla has confirmed its earnings on the 29th of January, which is Malaysia 30th January, second day of Chinese New Year. Usually, when you want to digest more sophisticated earnings, you will need more time to know what to look out for. So instead of doing it live, I want to do it right now so they can plan better for it. Right? Okay, so this earnings for Tesla is to report the Q4 2024 earnings, right? Q4 to be reported in Q1 right now. And this particular earnings announcement are one of the very important one because Tesla valuation is actually very high, which I will show you later. Right? So let's look at what is the bullish catalyst that will drive the stock price to go up. The first one is strong FSD adoption and the FSD subscription. What is FSD, right? Full service driving car, right? That means the autonomous driving. Yeah. Why is it not EV? Why is it here? Because EV is a very competitive market. People are looking at this as the potential catalyst that can make Tesla more valuable because it's a new income stream compared to just selling cars. And this is a software side which can generate income for Tesla over and over and over again rather than selling one-time vehicle. Right? For the same person who buy the car, you want to make more and more from them on an annual basis. Okay, that's why it's important. Then the next one is a higher than expected Cybertruck demand and gross margin. Cybertruck is actually one of the important new product for Tesla where people are looking at, okay, this can help to differentiate Tesla compared to competing with a lot of other EV car manufacturers on the same car, but this is on a truck, is a totally different category, right? So this will help Tesla to have a new revenue stream. And of course, bottom line, we want positive margin trends, right? Due to all the competition that you may be aware of, right? From all the China manufacturers especially. And we also want to look out for new AI initiatives. Now, the mega trend is all about AI, right? So people are looking for, is Tesla advancing in AI? And what are they implementing in AI? So this fifth point is also very important. We have a new energy storage. Based on the last earnings report, this area is growing very, very fast. Right? This division can be bigger than even the car business. Right? A lot of people may not be aware of it. They only hear that, oh, Tesla is about EV car. But this is one high growth area. So people will be looking at how significant is this? How many percentage of the overall Tesla revenue? That will give people a relief on some of the competition, especially with the China brand. The next one is on licensing deals, right? With the autonomous driving framework as well as the ecosystem, they could actually sell it to other car manufacturers. So if there's any licensing deal, that would be big, right? Why is it big? Because when you sign a licensing deal, let's say if GM adopt Tesla technology, like GM already have a lot of sales, right? That is a significant, and you don't have to work on selling cars. You just get the licensing a portion of it, right? So that's why this is important. And last but not least, right? You may have seen the Optimus robot. If not, go to YouTube and check it out. Optimus robot, which Tesla has a demo, especially recently, right? They have a few updated demo. People will be looking forward to this humanoid robot production targets, pricing, and when they can achieve profitability. So it's good to see that Tesla has a lot of new initiative besides just the EV car. And you can see there's a premium that's being paid on Tesla. So all these new initiatives become important to see whether it deserves that premium that people are paying, right? But you also need to watch out for the bearish risk. Yeah, one most important factor that I mentioned is high valuation. Later, I will show you why I call it high valuation. When the stock price valuation is high, it's going to be subjected to vulnerability. Right? It means any negative news at the overall market sentiment, right? Overall market sentiment can contribute 40% of overall price move. Then you can see a bigger setback for the stocks. Right? The second one is if anything wrong with any of the deliveries or hiccup here and there, then it will also be subjected. Whereas a low valuation stock, right, will not be dropping so much, right, compared to a high valuation stock when there's a problem. So what are the potential vulnerabilities area that you need to watch out for is when they have weak deliverable numbers. Right? This in the past has caused Tesla stock to go down a lot during earnings. And the next one is further margin compression, which is already a known risk, right? So that's why all the other initiatives are very important to counter this. This is already a known fact, right? Margin pressure, right? Because of the price cut. So just that people are looking at how significant it is. Right? The next one is impact of tariff on the raw material potential retaliation. He may not announce too much on this because Trump has not really announced the details. He has just imposed, he said he wants to impose this on February 1st on Mexico and Canada. More importantly is whether there's any other announcement related to the country that Tesla sourced its raw material from. Okay? This could come in later, but just watch out for this, even beyond the earnings announcement. And also whether there will be a retaliation if Trump announced a high tariff on China or Mexico, whether there's a retaliation which caused the raw material price to go up. The next one is definitely a strong concern, which is the demand, especially from China, right? And also the rest of the world due to the competition with the China brand that is also sold in other countries like in Europe. And one more area that we need to watch out, although it's usually not so obvious or mentioned, is any supply chain disruption. Due to all the tariffs, there could be some dislocation of supply chain, right? So some of the factories or raw material providers may have to be relocated to US. And there could be some temporary supply chain disruption, which may affect the delivery numbers. Okay. So the other part is if there's any lack of progress of autonomous driving or any issues that can cause the delay on Tesla being able to absorb this number is also important. On and off, you will see Tesla car crosses some crash here and there. Sometimes it causes some setback to it as well. Right? Any issues with the software and so on that is significant. And the next one is on AI competition with companies like Nvidia and Google could limit Tesla leadership, especially in the autonomous driving. Google has already deployed Waymo in many cities in the US, so they are way ahead of Tesla. So Tesla needs to do the catch-up game. Okay? And so in the US, this will be the next important competitor. But knowing Elon Musk, he could expedite all this. And he has a good advantage on his proximity with Trump. One of the greatest hurdles for the autonomous driving in the past that is affecting both Google and Tesla is related to the approval, right? But now with Trump around and he wants to, relax some of these stringent rules, that's actually in favor for this area, not just for Tesla, but also for Google. But Tesla really need to compete to catch up on this, right? So these are the both bullish and bearish risks. But let's look at some of the numbers. So just now I mentioned that Tesla valuation is high, but how high is high? Let's look at this number, right? The price over earnings ratio, P ratio, is 116. That's very high because Nvidia is only around 56, which is already considered high as well, right? But if you compare to Google, Google is only in the 20s plus, right? So let's look at the contrast here. And the forward PE is 128. That means based on what they can earn next year, it's also considered high. And let's look at the PEG. Okay, PEG is the PE over the next 5 years growth. And it's 43. 43 is extremely high, right? Normally we want a number less than 2 ideally. And 43 means the price right now already factor in a lot of the future anticipated growth. So what if the growth doesn't come in? Do you think there'll be a serious correction? Yeah. So this is why it makes Tesla vulnerable, correct? So if you're an investor or traders, you need to understand this before you buy. You need to be clear whether you're an investor, right? Investor, definitely this is very high value to go in, right? You don't have a margin of safety. And whether you're a trend trader, right? You just trade based on the stock chart, but you also know that if the numbers doesn't come in well, or on and off there's a bad news that invalidates some of the things that we talk about, then it could also have a gapping risk, right? If you're a swing trader, you trade the swing range, right? You also will be subjected to overnight risk. But if you're an intraday trader, it's fine. You trade the chart of the day, right? You don't have any overnight risk, right? So whether you can trade this stock depends on what trading style you are using. Okay. So if you're not familiar with what I mean by all the different trading style, you can click on the link below to join our 3-hour free webinar. Okay. So let's look at other than valuation, we also look at the profitability for Tesla, right? ROE is a way to look at how profitable for every dollar invested, how much are they making. It's 20.65. It's still good. I would say that there are companies that are even higher than this. So it is still a good company. However, if you look at the valuation, you are paying too high as well. ROA is 11.92, which is also good, right? Profitability-wise is okay. Let's look at the profit margin, right, which is also one of the major concern, especially with the tech competition that Tesla is facing, especially on the EV. So gross margin 18%, operating margin is only 8.48. That means Tesla right now is not having a very big profit margin, right? It's quite thin. So when you're thin profit margin, what does it mean? Like the numbers that you're selling become very, very important. You don't have a lot of room for the numbers to come down. And part of the reason the profit margin is low could be all the investment in the gigafactory, or the AI and robotics, right? So we do not want to just look at low profit margin and we don't buy the stock. So there's sometimes people pay for the strategic initiative that Tesla invests for the long-term future, right? So as a beginner, this could be a bit tricky, but now it just tells you this is the current operating margin. Right? Operating margin is the core business of Tesla, and net after you deduct tax and interest is 13%. Right? So a lot of other tech stock right now are having higher profit margin than this. Right? So the lesson learned is don't be too hung up that I must buy Tesla. Right? You can evaluate the pros and cons and make your own judgment depending on your trading style. So I hope this is useful to you. Let's look at another aspect, which is what does the analyst think, right? The analyst in the market. So you can see that there's only one strong buy. This, the way we look at it is 1 year ago, there's no strong buy, right? And the recent forecast shows one strong buy, but the rest are buy. But there's also a lot that says hold. Hold doesn't mean it's bad. Hold could mean that this could be still a great company, but it could be overvalued for the meantime. Right? But there's a lot of sell rating. Normally, I don't like to see a stock, especially the one I want to invest or hold overnight, to have a lot of sell rating. This shows that there's a lot of diverse opinion. Right? It's common to have one or two sell, right? Even for the greater stocks, but this is a bit too many. Right? So sell rating could mean that they think it's way overvalued, it's better to sell first, or it could mean that there's really a problem with Tesla. Okay? Whatever it is a warning sign, and there's a consensus price target here, which is 305. Okay, 305. So later we'll look at what is the stock price. So this is the based on the consensus target. Like there's another 28% downside. Like this is based on average opinion. Of course, there'll be diverse. Like some will be optimistic, some will be more pessimistic. Okay. All right. So now let's look at the stock chart. Okay. So this is the daily chart. Before you evaluate what you need to do, whether you should be buying or selling or do nothing, you need to understand your trading style. Right? So long-term investor will look at it very differently compared to short-term trader. So from a swing and trend trader, we look at the daily chart. Let's look at this chart over here. Right now, as I mentioned earlier, the valuation is very high. So if there's a negative outcome from the earnings, it could actually gap down. But let's look at what can happen in the past. When they miss earnings, right? When they beat earnings, then it can gap up, right? So far, it's been gapping up, right? But they can also gap down like this, right? So you'll be careful on that and can bypass your stop loss even if you have one. Look at the past here, and can gap down. So at least look at the gapping history in the past, then you know how big the gap could be. But because of the significant valuation right now compared to before, especially after Trump election, the gap down could be more significant if there's way below expectations from what people anticipate. Okay, so if we gap down, where are the likely plays that people will watch out for? Because I think the long-term perspective for Tesla potential is still there, right? From the autonomous driving and also from the longer-term future on the robotic side, which is humanoids. And the Cybertruck may also take off further down the road, and their AI initiative and a full service driving car subscription. But what we don't have right now is the margin of safety. So we want to correct. So as long as correct to the level where it's a safer level to come in. So there's a fundamental and a technical. So fundamental, we look at the valuation that I covered earlier. Technical wise, we can look at where are the potential area where there could be a rebound. Of course, one is the EMA 200. And this is also one area, like the previous resistance area can potentially become an area as well. Like this is from a technical trading perspective, right? So we need to know where to look out for. And in an extreme scenario, that one will need a disaster for it to come back all the way down here. Like, so this gap down, if it's not that bad, this could be an area where technical traders may come in. Right? If we break this level, then we need to look at the next potential support area. So we never assume, right? No matter how, sometimes great earnings is where people sell off. I've seen this a lot, right? Positive earnings, sell, like sell on good news. Negative earnings, if it's not overvalued, people could buy on bad news. So I always confirm with a technical chart. And if you are, this is from a trader perspective, but if you are an investor, typically you'll look at a weekly chart. Like, let me just remove the lines. Like you can see, you know, from some people they use moving average, or could be other ways. These are the levels that, you know, it could come in, or it could be the horizontal level, right? Yeah. So these are all the significant level that people may come in. So one of the biggest risks for Tesla to me is if anything happened to Elon Musk. I always ask myself that, what if something happened to Elon Musk? So I always use options to have any overnight positions on Tesla with the limited risk. And the other part is trade intraday. Okay? These are two. Or you just reduce the exposure, but you must always bear in mind, right? So we are this Tesla is too dependent on Elon Musk in terms of the premium. What I've covered so far is a critical, quick, essential summary of what to look out for in Tesla earnings, because I know that a lot of people are very busy. They won't have time to look at so many details. So, but if you want to have more details, I have a bonus for you, because I'm a very detail-oriented person. So I have prepared another 10 slides, right, that has a breakdown of other critical elements, more detail to describe what is in the summary earlier, right? So if you're interested, click on the link below to download. So hope you find this information useful. And we're going to have something even more interesting, which is the live session on the Google earnings on the 6th of February, 8 p.m. Malaysia time. So do click on the subscribe button and also click on the notification bell so that you will be notified, and look forward to see you there. And if you find this sharing useful, do click on the share button and share with more people, and that also encourages us to produce more of this video sharing as well as live session. And also put in the comments below on any comments regarding this sharing, or anything that you want to know extra, plus what are the kind of companies that you want us to cover, or even topics. And I look forward to see you in the next YouTube live session. Thank you.